Ladies and gentlemen of the crypto space, we're live on a Monday, February 10th at 11:31 a.m. Where to begin? Now, it's been a long road for everyone. It's been so many streams of ours, so many stories, so much simplification of endless complexity. You know, how do you start a stream that has a similar story almost every time? Every time I start a stream, I kind of try and simplify things off the bat. I try and focus on an idea, something that folks will find meaningful, something that will positively impact people, their decision making process, and how they think. 2025, everything has changed, yet everything will not change. There's so many things that will remain the same, but as we see, so many things are changing. This administration is doing remarkable things, absolutely incredible things with regard to efficiency. It's insane to think that efficiency is a bad thing. We literally operate in a world that is dependent on efficiency at the corporate level, and we operate on efficiency at a personal level. We balance our budgets, and it's insane, really, to think that a government can't balance their budget. Oh, gee, what's a bad thing if they balance their budget? It's bad. It's very bad. Math is math. Budget is a budget. So if we take that idea of efficiency and apply it to information, to weed out the bullshit, to identify the signal through the noise, there's nothing that changes. And this is pretty much what Lynn Alden's talking about right about now. She sees changes at the margins. And I as well. I completely agree. Change starts at the margins, but the entire system operates on momentum. And right now, the same narrative remains the case. Almost $10 trillion needs to be refinanced this year. Can't do it at these interest rates without spiraling, death spiraling, Luke Roman style. And obviously, there's entire nuance to this conversation, and I'm simplifying, giving the high level statements. So, this chart is the 6 month chart of the 10-year US Treasury benchmark interest rate. There's a lot of lines on here for shorter term time frames, but it's the big time frame that matters because of things we talk about. Cycles will cycle, and cycles cycle on the backdrop of a secular trend. Things are either going up or things are either going down. I don't give a shit about people's 1 minute charts, daily chart. I don't. People drive themselves nuts over bullshit. What matters is the long term trends. Because if you thought like that in 2008, and you thought like that in 2000, and you thought like that in 1987, and you thought like that in 2020, there would have been very different outcomes for our personal financial situation. It's true. Now, as someone who thinks about macro and the structure of the system, which really reduces to quantity of money, availability of assets, and capital flows, this chart screams something very interesting from a structural perspective. Starting back clearly in the 80s, peaking in 1981, it's been a downward trend. Now, we're talking about countries here. This is the most important trend to understand. Now, trend violation screams that the structure of the system is changing, and this is unambiguously a trend violation over the past years. These types of charts take years to play out, and a chart isn't a chart. A chart is real life people, because people's behavior manifests this chart. So this isn't a chart of treasuries. This isn't a chart of interest rates. This isn't a chart of numerical data. This is a chart of people. This is a chart of countries. This is a chart of politics, geopolitics. And this chart says the world is changing, period. If that is your starting point, how is the world changing is the next question. We clearly discussed this, but as I've said, I try and hit home with something that really matters, a statement that really matters. And it's already changed. It has already changed years ago, 2 years ago, almost three at this point. With these candles, interaction with the 200 SMA in the 6 month, it has already occurred. So cyclicality suggests down from here, because this is the most epic run up in 10-year yields in the history of 10-year yields in modern financial terms, period. So things only go up until they stop going up. Then they stop and reverse. Trends continue until capitulation, then they reverse. They reverse cyclically. The question is the secular trend. And we sure as hell will find out in the next few short years. I say probably about 2 years. Do we think we get back to a lower low? Are we going to hit a lower low in this chart? Oh, dear Lord. A lower low in this chart means people are willing to accept basically shit income off their US government debt ownership. 0.33% was the low. It is impossible for this system to accept that number. You can't say ever again, but oh my God, who the hell would accept that number? The fact that that number was accepted is mind boggling, but it was. That's where we were. And we're not there any longer. So, from an odds perspective, the odds are significantly greater that there will be a higher low, not 0.33%, but something greater than that and something less than where it literally stopped, the 200 SMA in the 6 month, cyclically. The odds are significantly in that favor. And that means everything. That means everything with regard to currency supply, collateral availability, behavior of people in response to interest rates, especially in real estate markets. The structure of the system is changing. What is not changing? How the system responds to collateral, how the system uses collateral, how the system uses collateral to increase currency supply, and how currency supply is used to, at this point, we probably could say, fabricate nominal growth, nominal total financial activity growth. All countries, no matter what anyone's opinion is, needs to increase their GDP nominally, you know, considering inflation, not inflation adjusted, nominally. By definition, that's what I'm saying. Not inflation adjusted, which is what nominal means. So this has to come down. The mechanics of the system will remain the same. The secular trend is the fun part because we've never seen the crypto market behave in a different secular trend. Only seen the crypto markets behave in a secular trend where bond yields were lower lows and lower highs cyclically. Now, obviously, this is a few short years, and this is all post 2008. So it's only a few short years in a macro context. So when this these types of instruments, this is the collateral of the system, Think about throwing your Bitcoin on Aave. If the Bitcoin price goes from 100,000 to 200,000, what happens to your health factor? It goes up, which allows you to borrow more. When you borrow, you create currency units. You're adding more currency supply to the system. Now, that's a very specific description of behavior in crypto markets, and I use that description so people can understand, people that are very crypto centric and they understand the financial system in crypto terms, but take that and apply it to the world, the hundreds of trillions of dollars. How were they created? This is how they were created. The description I just provided. The world doesn't use Bitcoin as collateral, it uses US treasuries. Treasuries go up in value. The global Habe health factor goes up. The world's currency supply goes up. Capital is deployed for productive purposes, hopefully, aside from malinvestment, of which there's a lot, things get monetized. The question people ask that should ask themselves then is what gets monetized? Monetize means bought. Why do people buy things? Because they think other people are going to buy things first and foremost. Ooh, a lot of people are going to like the AI narrative. I'm going to buy some AI. Other people buy it. Oh, it goes up in price. Oh, ho, ho. Obviously, that's only a part of the investment landscape. There's venture capital where people buy companies for, dare I say, income purposes or cash flow purposes. They add a subsidiary so they could get cash flow. So that's the investment process. So what gets monetized in the old world versus the changing world? So hopefully, some of the damn malinvestment has been cured to a degree. I would say some of it has. In a world where capital is more expensive, higher interest rates, you need to be a little bit more considerate of how you deploy capital. And this is big money. The big corporations and the nation states and the government agencies around the world, the NGOs, they will be more prudent, exercise more due diligence. So clearly AI is a destination. Clearly crypto is a destination. And now, really, the thought process that everyone should have ironed out by now and nailed down with rigorous precision is what kind of investor you are. In the new world, in this changing structure of the system, not what will outperform the most. You'll drive yourself nuts because there's no end to that question. The most important question you could ask yourself is, in this changing new world, where will the money flow? And where can I deploy my capital without driving myself nuts? Not how much money I can make. That is not the question you should be asking yourself. That's the question for, that is the question the majority ask themselves. They think in terms of making money, quote unquote, which is, there's no such thing as making. The funny thing is, I digress. In Spanish, they say, a ganar dinero. A ganar. They don't say hacer. There's no hacer dinero. So I've always appreciated that. For the folks that know Spanish, what's the difference? There's no making money. I mean, to a degree, you could have an entire conversation about the distinction between printing dollar liabilities and it being, in aggregate, the money we use versus printing it at treasury level, M0. But the point really is people ganar dinero. They win money. So it's just a critical nuance Just you got to understand at least what you do, why you do it, in order to actually be able to iterate and self improve. Okay, so back to investing. And obviously, folks are going to bring up some good questions. And I think that's probably better to do that stuff. But let me finish at least a thought or two. You have to choose who you are, what kind of investor you are, because that's the only way to maintain sanity. Otherwise, you're buying fart shit coin and chasing stuff that is unsustainable. Not unsustainable with regard to an altcoin the meme coin super cycle type of narrative. That's just a very shallow narrative. Shallow, it's juvenile. Thinking in terms of, oh, I'm going to make some money. How do I get out of this shitty situation financially? Maybe folks are in shitty situations, and I would probably say the vast majority think they're in shitty situations when they're engaging in behavior as such, which is unfortunate. And I've always been historically empathetic to that behavior, but in the end, we are responsible for our own results. We are responsible for our own sanity. You must be responsible to yourself. Now, there's a word for that in financials that's called the fiduciary. You need to be your own self respected fiduciary, which means emotions have no fucking business in any of this process. So I'm cursed with an attribute, a characteristic. I am a reductionist. And that's how I have historically talked about investment methodology. I look for things to invalidate. I invalidate investments. I invalidate ideas. I invalidate perceptions or things that I think I understand. And I get to the base rules. That's why I've talked about rules a lot lately over the last year. Now, ganar dinero, hacer dinero is irrelevant. Both of them are irrelevant. How about that? It's both irrelevant. It's nice to understand the distinction, the nuance between the two. But this entire process of capital management and investment ideology, not about making or winning money. Reduce. I weed it out. I get rid of it. I reduce the equation to something simpler. The equation is take into consideration capital flows and the macro stuff I talked about, the changing structure of the world, AI and crypto at the forefront. What do I own? What is meaningful to me? What is meaningful to the world? That's simple enough. Crypto AI. For a while, I thought that was battery metals and all the alternative storage technologies, the energy storage technologies. That's about it. Energy, which is the world's currency underneath all currencies. AI, reshaping the world, and crypto, which is reshaping finance. It doesn't. I don't need anyone else to tell me it's reshaping finance. It is the permissionless, decentralized, deterministic nature of it. So therefore, where's the investment opportunity? And what does investment mean? I've already invested. I have nothing to buy, nothing to do. I've done my work. Now I sit back and I digest what I've done, why I've done it, and that's a hindsight perspective. And now I'm here today. What do I do today? I already did the work. So now I'm digesting it. I'm refining my rules. I'm refining my understanding of why I've done what I've done. For what purpose? The purpose of clarity, the purpose of being calm, elimination of anxiety, knowing that I made the right decisions. So, crypto, there's nothing else besides crypto. Eh, There's nothing. And that's just my reductionist perspective. Now, that comes back to the equities versus crypto type of conversation we've had many times. Equities, people, corporations, boards, decisions, subjectivity. The people's opinions. Oh my God. White pasty board members sitting on their perch high above the masses. Here, you paltry peasants, here is your dividend. I increase it 5 cents as we recycled it to buybacks to optimize your tax treatment. Now, for folks in the crypto markets, you remember Merlin candles from Abracadabra? How fucking well do buybacks work in the long term? Fucking buybacks. Buybacks, that methodology. Oh, my share price will increase. My token price will increase. Merlin candles were sold. Buybacks are sold for folks that engage in that kind of capital management methodology. So I invalidate that methodology. It is not even a consideration. It is not a thought in my mind because I choose to not put in that kind of work. It's too much work. In my mind, there is one simple equation. What do I buy? Will it be here in the future? Is that motherfucker going to pay me? Obviously, that's XYZ, and that's obviously my historic pinned Twitter X post. Motherfucker, you fucking pay me. Otherwise, I ain't giving you shit. And I'm not going to give you shit unless I think you're going to exist in the future. Okay? And that's what has gotten us here today. To today. That refined thought process. Methodically executed. Human, there's emotion, but the emotion's irrelevant. So that decision making process. Yes, I admit the captain gets a little fired up sometimes when there's a historic liquidation like never before seen, bigger liquidation than COVID collapse in 2020, bigger liquidation than the Cascades in 22. What, a week or two ago? This liquidation. You know when the biggest liquidation ever is going to come? When freaking Ethereum shorts on the options exchanges, commodity, the CME gets blown out. That's going to be the biggest goddamn liquidation ever. You've seen those charts. I don't have them. I don't retweet them, but they're there on X. That's going to be the biggest liquidation ever. It's going to be a melt up. It's going to make people's eyes bleed. Has to unwind. I don't give a shit when. It's irrelevant. I already made my investments. Now I get to sit back and watch it unfold, thinking about inevitabilities. No such thing as destiny. There's no such thing as certainty. But there is inevitabilities with regard to economics and mathematic equations. I guess that is a degree of destiny in some regards, not the mystical kind of destiny. It's a destiny. The equation must balance, like the architect in the Matrix. If you pile it on shorts, at some point the shorts need to unwind. The whole point. And that's going to be a crazy ass unwind. Okay, okay. Anyway, enough of a 25-minute opening monologue. Hope that was a decent story for today. They only showed you the 10-year US Treasury yields. We were still hovering at 93, so there's no party yet. Nothing yet. The XY's at 108. There's no party yet. There's no nothing. The cycle that I give a shit about hasn't started. There has been no bull cycle. Anyone who says there has been a bull cycle does not see the bull cycle as I see it. I mean, literally, you, you, dare we look at the dollar on the 6 month chart? That's it. This is all you need to see. That's it. That's all you need to see. No bull cycle. Nothing. Where's the guppies? Where's the beautiful guppies? Draw? You gonna draw? Draw the guppies. Draw the guppies. Draw guppies. Draw guppies. Guppies don't want to draw from me today. All right, fine. I'll give you one refresh. One refresh of the page. Here's why. Show me the guppies. Sorry, guys. Guppies don't want to draw. But you can see it. You've seen it, and you will see it. You will see when we breach this 200 SMA to the downside, the weekly guppies turn red. The Ethereum shorts unwind, and this emerging market of emerging market plural get monetized until people say it will never, ever, ever stop going up. Eyes will bleed, heads will explode. People will say crazy things, and then it will all come crashing down, as it always does. When it gets overpriced, and everything gets repriced 100x from where it is, it's financial destiny. It's written in the stars. Economics 101 trends continue until capitulation, and the capitulation hasn't even started yet. It's really what the administration is trying for. We need to keep interest rates relatively elevated at the Fed funds rates level, short-term interest rates, which means the Fed's going to have to manage reserve balances, um, which means how is the administration going to get the benchmark interest rate down 10-year plus? It's going to be a freaking interesting year. This is going to be so damn interesting. Now, obviously, the backdrop, I'm not going to digress, but the backdrop of all this is like efficiency and what's going on at the administration level. It's very interesting. I'm a big proponent of efficiency. It's just rational. It just is. Period. Okay. The advisors in the house. Good morning, my friend. Gazika. Greetings, Cap. Rational peeps. Mix in the house. Tape pusher. In a few words, what does crypto being property really mean? Oh my God. There's three sets of tax laws in the United States: personal, corporate, and trust. Completely separate tax laws. A lot of trust laws gracefully degrade and depend on personal tax laws, particularly IRC 67. But there's IRC 641, 643, 642, whole bunch of IRS rules, and endless precedents at the Supreme Court level, federal and state level. Crypto being property means there's very different rules that apply to accounting and tax treatment. Now, obviously, that tax treatment is respective of which set of rules you're using. You're using personal rules. You are the most constrained of all the rule sets. If you are using corporate rules, you are less restrained than personal. You have different options, different choices, but in the end, holy frick, it's complicated. I hate corporate rules. Obviously, if you are in a corporate setting that warrants a corporate structure, people, 100 people, whatever, that's where corporate rules come in handy. Like an S corp, full pass through, goes right to shareholders and who you're paying to. It's pass through. Pass through is a big concept. Now, trust rules are the most interesting because that dates back to Great Britain. Good old England. Trust rules have a history much older than corporate rules, much greater precedence, therefore much greater weight, and much greater vested interest by the powers that be that protect trust rules. So property, depending on which rule set you're using, has different rules. So technically, there's money and property for personal, money and property for corporate, money and property for trust. So that's what property means. It's a different set of rules. And that's basically been my work for like the last 2+ years. What are the rules? What I told the story that I sat down with my family. This was a while ago, so this is an old story, but we read the rules of Clue. I never played Clue in my life. Go figure. It is what it is. So we sat down. It took about a half an hour to teach my 6-year-old and for my 9-year-old to get a refresher and to read the rules. This is really what folks call like what does the general public call it? They call it loopholes. They call it only the wealthy can have trusts. Just read the it all changed with AI. When obviously the original chat GPT was like quite limited. This was literally what, within the last year, a year ago, it had the capacity to hallucinate things. So it was a little bit harder to do back then, but now it's not only with deep research and ChatGPT Pro, you can run this shit locally. This shit is crazy. I wrote, I've done all this aside, and I come back to like just ChatGPT Pro and call it a day because that's supported by corporate infrastructure. I'm like, well, it's fun. I'm an engineer, I'm a developer. Spin up a couple of LLMs locally, run some Python, connect them all, and there's a variety of like open source DeepSeek algorithms, which is basically like a Python script that interacts with Olama instances. And you could run this stuff. You could avoid the $200 a month fee. But the point is, this stuff right now, AI right now, does the work of paralegals at a law firm, which is a paralegal does research, amongst other things, which means it goes out and it searches and it gets real information and it processes that real information. And ChatGPT o3 has a goddamn IQ of 130. There is absolutely no excuse to not ask questions to AI. Sorry, not sorry. Every single person that hears my words and doesn't hear my words should be using AI every single day because you have questions. Whether you have to have questions. What is this? What is that? How do I use this? How do I use that? And then it leads to a rabbit hole, and then you never stop asking questions. So ask ChatGPT the questions, not you, Take Busher. I'm saying everyone in the context of U.S. tax law, personal tax law. Describe the difference between money and property. There's a question. Now do it for corporate. Now do it for trust. And then eventually, after some time, you get to something like this. This was produced by ChatGPT Pro. And this was a hell of a question after a massive conversation. O3 model, DeepSeek, and a tremendous amount of context provided by me to shape the structure of the conversation, to shape the context of the conversation. Well, it's decent. It has a decent argument, meaning there's an opening argument. What is it trying to do? What is it trying to solve for? What are the realities? What is the precedence? And note these are all quotes. These are all direct quotes. What are all these references? I've looked at all these cases. I've looked at all these Florida statutes. Looked at all these federal rules. I mean, literally, just go 641. It's all here from Cornell Law, and this is the type of output that ChatGPT is capable of nowadays. So, I could delve into this, but I'll let someone ask a question if they want me to. If you want to ask questions, I could talk about this. State law, federalism, deep stuff. I'm going to move on from this question, but finally, after this rambling, to answer your question, it means property isn't income. Property isn't money. So, what rules govern property versus money with regard to income, taxable income, gross income, adjusted gross income? What is and what is not deductible? These are very meaningful questions. This article, if folks wanted, it's obviously on my X feed. Good question. Never stop asking questions. And now you could ask computers questions, and they have a 130 IQ. Athletic concept present, Cap. Sir, yes, sir. Good morning. Good morning, my friend. Arrow, good morning. Always a pleasure. Athletic concept, bright future ahead of us. Clearer picture makes us understand where we are going. We're heading there. We're on the boat. We're heading towards the destination. The destination's the destination. Path of the journey is treacherous, filled with volatility. Shit. Destination's the destination. It's it's to a degree deterministic. It's gonna happen. I don't care when. And that's investing, as I see it. Our show, much pleasure. How are you? Greetings, Cap. Finally got a card working in India. Nice. Had a nice dinner with parents. Yeah. Taking cash and just waiting for RJ Projects to play. Yay! Awesome. That's lovely to hear. A process. Write the rules down. Execute like a machine. Follow your rules. I do this under this circumstance. I do that under that circumstance. For instance, I accumulate cash. I have cash. It's at the end of the week. You get a paycheck from work. Now you get a paycheck from the things you own. You have a savings account, not a savings account. You have an accumulation account. I don't believe in traditional word savings. That's dead. What you have is a working capital account, and working capital means, all right, I want to go out to dinner. Do I have capital? I got to pay these bills. Do I have capital? I want to invest in something. Do I have capital? My man, write the rules down. Write your rules down. Jeanette? Jeanette? I believe Jeanette. Good morning, Cap. What's your thoughts about fluid? Fluid's a big deal. AMM, rehypothecates. I'm interested. It's huge. It's repriced already. And it's not consistent with my investment methodology. In that regard, Bunny's more interesting to me, and that's okay. Um, People will obviously have different opinions, and that's fine. Um, I'm not too excited about like Uniswap. I'm I'm excited at it as it's a technology that is big leap forward with V4. I'm excited how projects are going to build on top of it. Literally, Bunny launched first out the gate, boom. So that's interesting. It's not the pinnacle of what I find interesting in the investment landscape. Just isn't. That's okay. So how do you manage that? I size positions accordingly. What I find most interesting, what I think is the best investment, and there's a speculation in that. And that's okay. So, well, it's cool. Big tech. Period. If we look up IN InstaD or whatever the ticker is, up and to the right, how much cash flow does it produce? Is it producing 20, 30%? Because all I know is Tango is up at 280%. Crazy time. Morning cap is soon in the house. Much pleasure. Hey pusher, make win money is relevant for you since you could choose escape velocity just in case a new watcher approaches finance the same way with small portfolio. Every portfolio requires size consideration. I believe that is a reasonable statement. Escape velocity is a reasonable statement. Well, how do you assess escape velocity? Cash flow. So a good benchmark is your salary. You're making 3 grand a month, US, US numbers, not international. 3,000. Fine. If you're pulling in $1,500 a month in cash flow from investments, maybe it's not escape velocity, but bear in mind, maybe it is. Maybe you live in rural Idaho. Maybe that is escape velocity. So these are very subjective types of self-reflective conversations people have to have with themselves. What is escape velocity? Folks need to define it. When do I have enough cash flow from investments that I can behave differently? That I don't need to engage in capital gains. Maybe I made 3 grand a month. 20 years old. I live at home. I saved 2,000 of it, and it's 2025, and I have $200,000 saved up, and I'm 30 because I've been at home for the last 10 years. $100,000 saved up. So these are a lot of scenarios, and I have no investments. And now I'm like, oh, what do I buy that pays me cash flow? So $100,000 investment uh, can produce significant rates of return, 20, 30, 40%. And you can structure it, position size accordingly. Smaller positions like the contango at 250 plus percent, volatility considered. Smaller revenue producers curve 20 plus percent. Um, and V33s and whatnot. A diversified portfolio, which is not, and then you go down the rabbit hole, so on and so forth. So let's say you crank out 20 to $40,000 a year off $100,000 investment. Maybe that comes back, unfortunately, to what I think of with regard to children and financial education. I've often said, and said most recently, that there's a viable path to just graduate high school and work at Best Buy for 40, 50 grand a year and stay at home for 10 years and just invest in compound and check back when you're 30 and you're sitting on 2.5 mil off a 40, 50 grand Best Buy salary. So there's a lot of components to these considerations in that equation. Um, you know, escape velocity. I would argue from my kids and whatnot, and people that I would give financial advice to, like cousins and family and whatnot. I don't like gambling, so I have a cousin. They don't live at home. They're in their mid 20s. And they live in this gorgeous apartment, 2,500 bucks a month. Probably the vast majority of their capital. What would be my financial advice? Do you speculate? Do you trade? I would say no. Just get rid of the fucking apartment and move in with family. Move in. So that is a better financial course of action than speculating on trading. What else am I supposed to say? That's the only way the captain can think about that. So escape velocity and goals and how to achieve those goals do not need to be achieved vis-a-vis speculation and gambling. That is a course. There's a chance of success. There's a chance of failure. I like to minimize those parameters in the equation. With long-term investing and cash flow, the accumulation of assets, the number one rule, own more assets. There's little to no chance of failure. Problem is time, time preference. Most folks have an extraordinarily short time preference. Oh, I can invest in this and it goes 100x on the money. And I made it big in a relatively short period of time. So maybe we do need to take into consideration, tape pusher, the fallacy that it's important, necessary to engage in certain behavior, risky behavior with regard to what one would define as investing, to gamble on the price of something based on the behavior of other people. And I would argue that that is not the appropriate course of action. My 2 cents. That helps. Soon, I'm actually about to go deep research to find some cool stuff with the ETH unwind. I will share it. See, literally, it's like gather research based on historic leveraged unwinds in traditional finance equity markets. Yeah, look at the numbers of ETH and what conditions would trigger cascading leverage liquidation. It's very interesting, and it'll do the research. So, my man, you got see what you can do with software that could do the research. Goodness gracious. I'm sure you're going to produce some very interesting results. Kellis is in the house. How are you? Always a pleasure. Always a pleasure. Let a concept catching the stream, in the steam room. Yeah, that is the place to be. Live long and live healthier. Good for you. Cap, this will honestly change your life for the better. Yeah, brain fog, more clarity and thoughts. It just is a toxin purge and a test of strength. It's everything. So I appreciate that behavior. Definitely healthy. If you're on X or on YouTube, feel welcome to ask any questions. More than happy to talk about any topic. I've covered the AI today, covered what it's capable of, covered some interesting realities about money versus property, truth, went over path versus destination, went over the reality that there's been no bull market. There has been no bull market since 2020. Not yet, because I define the bull market as red guppies on the weekly DXY, period. So, in my definition, there has been no bull market. Food for thought. Definitely went over that. Love this green line. Hell of a green line. It's so telling if you zoom out, like a 6 month chart on the DXY. Quite remarkable. This is the most prolonged period of non bull market uh, in crypto history. I guess this is pretty long too. Bear market started February 2008. That's 2 years, 2.5 years. No, this is the longest. So June 2021 it ended, and 2025 we still haven't had a bull market. It's been 4 years. This is the longest period without a bull market, as the captain defines it. Gold, the biggest signal through the noise, $2,900. Absolutely insane. Everything else is noise. This basically says that the destination remains unchanged. Period. That's what this chart says. The destination remains unchanged. Volatility will make people's heads turn around on a swivel. People will start running around like chickens without heads. And we know that's a fact because we look at social media daily. I don't really give a shit about the F or Bitcoin charts. Just my 2 cents. They are irrelevant. What matters is the dollar. What matters is the 10-year yields. And what matters is the move indicator. And what matters is that the destination remains completely unchanged. It's coming. Relevant whenever anyone's opinion is where we're heading. And that's literally like it's not for a better or for worse. It's just pure for better. It doesn't matter how long it takes. It's coming. And the volatility will chew people out, especially if there's excessive risk applied to one's own personal investment methodology, which is why trading is just not a consideration. What to own it at the cheapest price possible, then you own it and it's done. Own more assets over time. That is the bottom line. Who cares about equity markets? What we do? Bitcoin dominance, thus no bull market. Yet. Market. Bitcoin isn't a market. Bitcoin's Bitcoin. A market is the emerging market of emerging markets, best defined in terms of capital flows in dollar terms, which is, EVM networks, Ethereum, Arbitrum, Solana, what have you, Avalanche, Sonnet, dollar supply, churn velocity of those dollars, rehypothecation of those dollars, debt against collateral to create dollars. Those are markets. There has been no bull market. There has been no repricing of investment grade entities, investment grade crypto fintech enterprise. Capital has been concentrated in Bitcoin because the Bitcoin narrative remains supreme. It just does. And that's okay. That has nothing to do with enterprise. That has nothing to do with markets. It has to do with the price of a collateral instrument or a instrument with money properties that is collateralized. Okay. That's just a component of the conversation. From an investment perspective, fintech, products, services, revenue, consumers, completely separate conversation. Bitcoin is not an economy. It contributes to economic activity now, maybe more so than ever, at the traditional financial level, certainly at the crypto market level, but it's not an enterprise. So it just must be acknowledged. These distinctions and understanding the different components of these markets. Better you understand the limiting factors in what separates these things to consider, better you understand how this shit works. That's meaningful. Write it down. Write down the rules. Others that D 1.33% on the day. Look at that. That's your liquidation cascade. That's Bitcoin dominance just blowing through the roof. That was a massive, massive last couple of weeks we've been through. Curve up at 54 cents. If you go to the monthly chart, yeah. You go to the monthly chart, which nobody looks at on curve. It's actually really stunning. I mean, look at that time weighted average price. We're in green time weighted average price territory. We wicked right through it. I'm very much looking forward to the coming months. The monthly chart, each candle is 1 month. You need to let a quarter pass, 3 months, 6 months. And then you get to see the trend formation, cyclicality, the secular trend. It's lovely to see green guppies on the monthly. We haven't seen that since 2021. And this obviously, you can't compare. It's a different world back then, not only in traditional finance, but also in the crypto markets. This was a different world. This is a completely different world than this. Completely. It's a different world. You could talk about them, talk about hindsight, to compare them. It's a different world. It's apples and oranges. Completely different world. Snooky in the house, much pleasure. Hope all is well. Are they doing well at 252? Look at that. Look at that monthly chart. Look at that twap. That time weighted average price on the monthly. Oh my God. This is an absolutely gorgeous chart. There is no discounts to be had on Aave. Wow. Stunning, stunning chart with regard to average. But you know how you look through bullshit? That's how you look through bullshit. And if you really want to look through bullshit, you go like this. That's Aave. Let's see what, and that's curve. Pretty much very similar, except this hasn't repriced significantly compared to Aave. Yeah, interesting, huh? Even spell. Even spell. Good old abracadabra. Bottom, up. Look at Bitcoin. You got some more history here. Here's your price of Bitcoin. Monthly time weighted average price. Weed out the noise. Weed out the bullshit. Simple as that. Snoke, delicious Ave. Yes, indeed. Arrow looking at arrow. Uh, take a look. Different inspection is required. It's relatively new. Didn't depreciate as much as I would have liked to see with regard to acquisition considerations. I don't know. I don't know. But my friend, this comes back to probably more important structural considerations. When is that fine line? When is escape velocity? When is enough enough? Those are probably more interesting questions right about now for 2025. I don't have any more time. I don't care think anymore right now about discounted price. We've been doing this shit for years, dude. It's time to relax. We did put in the work. Now we get to process, analyze the structure in a hindsight perspective from 2026, 2027, and then adjust and acquire capital so that we could contemplate acquisition as the cyclicality persists and the secular trend plays out. There will be volatility, significant volatility. But for me, enough is enough. Right? Just keep coming back to that. I did enough work. Since 2022, we've been putting in work, 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 trying to craft a portfolio. Enough's enough for myself. I wouldn't have interest at these prices, $627 million market cap. I'd be more interested in Velodrome still at this point, but I've already acquired exposure, and we've already discussed those narratives. Free exposure. I mean, look at the shadow airdrop. Oh my God. That's got to be the most interesting airdrop. It pays. It was a 2x on Ramsey. Oh my God. So I'm interested in how much we're going to get from Solve 3. That's probably what's on my mind the most. Any news, Inc. blockchain? No, but we'll see anything interesting emerge vis-a-vis Velodrome. Uh, what are you on FX protocol after the liquidation from a few weeks ago? Uh, no unchanged opinion. So high opinion of the Aladdin Dow team remains. Incredibly sophisticated financial products, which are ultimately derivatives, will do well in the coming years. Um, not understood by the majority, off the radar, mispriced. FXN is a decent consideration. I don't opt for exposure because I prefer cleaver and concentrator for my Aladdin Dow exposure. Um, Simple as that. And I'm rigorous with how I define my behavior. Simple as that. That's it. Done. Have my exposure to Aladdin Dow, my chosen exposure, and that's okay. Simple as that. Keep it simple. Henry can't wait for Andre Project Fork season. Wonder if he will keep it open source and if Fork on Base will come free, free, free. When you own things that offer free exposure, this was literally the whole Cosmos season of the beginning of 2024. Airdrops, except now it comes in terms of financially productive enterprise. Seems a little bit more sustainable than just PvP, meme coin, pump it up type stuff. Actual business. Cap, what's your opinion on Danny Coin? No interest. Yeah, it's just DeFi, DEFAI. Cool. I have no interest in engaging in financial transactions textually vis-a-vis an AI interface. I have literally zero interest in any of that behavior. No interest. Doesn't have a place in my portfolio. I don't have any interest in the vested interest. One of the most important things to understand about investing is you need to know who your peers are. Who are you investing with? Who are you investing against? What is the average composition of the other investors? I have no interest in having exposure there. It's just all FOMO, greed, PvP. That's all it is. No interest. Relaxed. We are on when Wednesday claims. That's it. I'm done. Done. That's why I spend so much time focusing on law, legal matters, business rules. Much better use of my time. Hell of a road we've been on, Arrow. Hell of a road. Snoke, do you think it's a good time to start a business independent of your main job? Work and business is always good. Never, ever, ever quit your day job. Always diversify. Always maintain productivity. Productive. It's the only way to maintain sanity. If you're mentally healthy, your body usually carries suit. So if you have an idea, execute. I don't see myself doing very well just earning a Spanish salary. So try, fail, try, fail, try, fail, try, fail, try, succeed. Always try. Now, obviously, if trying requires capital, that's another story. I'm sure there's plenty of things to try that doesn't either require an outsized deployment of capital, and there's a lot of things that require no deployment of capital. Never stop trying. Shadow is wild, as is Contango. Contango's not free, but that too. It is one of the most mispriced assets I've ever seen. It's a relatively sophisticated financial product. There's clearly a lot of dilution, um, but the open interest is insane. I don't give a shit about that's but the philosophy that I've always had about like curve and the dilution. I don't give a shit about dilution. I care about X, Y, and Z. I bought something at basis. How much is it paying me? How likely is it to continue to pay? Everything else is noise. Clearly, dilution is a component of, is it even investable? Am I going to get diluted to the point where, you know, Y or Z get invalidated? There's the part of the equation. If the revenue just bleeds to zero, it's not a good investment. If it's not going to be productive in the future, it's not a good investment. So I don't give a shit about dilution. Folks have said, "Oh, you're going to get diluted." I don't care. I do not care. Last question for today. We'll wrap it up. I feel like I'm falling behind. I know that I must invest in myself mainly, and I hope to have some opportunity in this way. Any advice? AI will help. The only way to proceed is to ask questions and never stop asking questions. So you're asking me a question that, and I'll give you great advice, but I'm not always around. So ask AI, ask AI, ask ChatGPT, ask build your own AI, Obama.com, Cursor, Python scripts, build, experiment, try, test, never stop. The only way you come up with good ideas is if you never stop trying and testing. You're not falling behind because you just asked the question. And now, after being requested by the captain to never stop asking questions, today's the day that you change the way you feel and you use ChatGPT. There's a free version. It's Claude. You can start small. You don't have to spend any money at all. Then there's the $20 version, which helps to a degree. And there's the pro version, which is expensive. And then there's Olava, which you could ask the free version of ChatGPT. How do I start building my own chat interfaces with deep research? You go over to X and you go over to bookmarks and you go over to AI. Well, this is my shit. This guy is killing it. I put that in the chat for you. I didn't spin it up. It's a nice Python script, and I'm sure it does very interesting things. I've tried my own to roll my own to see what kind of API queries or search queries I could do and process it recursively. But you might as well build and iterate on other people's work. And in the end, when you go deep research and pro mode, this is a corporate backed implementation. It's extraordinarily functional. So for myself, I could justify the expense. You don't want any expense whatsoever. You run this locally. You run, 1.5 billion parameter version of DeepSeek. Run three of them. Run concurrent, and you craft the Python script. And you're like, you know, just go ChatGPT, the free version. No deep research. 4.0. I want to craft a Python script in Cursor. Then you ask it, what is Cursor? And it's a package download. And it's an IDE, Integrated Development Environment, in Cursor to query Olama instances. Help me get started. What is Olama? Okay, so you don't know where to begin. There's your question. What is Olama? It's a great question. Olama. literally a download. It goes in your toolbar. I don't have it open, but I can. Oh, you don't see my browser or my window, but it goes in the toolbar and it runs in the terminal and you ask it questions. And then you're like, oh, llama is in a terminal. What is a terminal? Just don't stop asking questions. But to wrap it up for today, thank you all for joining me. Monday, February 10th at 12:36 p.m. 316 people made it to the end of the stream today. I appreciate each and every one of you, and together we are all a little bit more rational because of it. I wish you all a wonderful day. Keep your heads on a swivel and understand things. Note if you have anxiety about anything in these markets, your job is to cure that anxiety by understanding more and more and more and never stop asking questions. Your ask from me is to find peace and comfort and weed out the noise, find the signal through the noise, and never stop asking questions. I'll see you guys later this week. I wish you all a good one. Until then,